Bitcoin is back in the spotlight after a strong rally in the month of April. However, new data suggests that the surge may not be as solid as it seems as of now. The world's largest cryptocurrency rose over 12.7% in April, which marked its biggest monthly performance since April last year and also its second straight month of gains. It's a strong showing since August, but beneath the surface, analysts warn that this rally could be built on shaky ground. According to crypto data firm CryptoQuant, the recent price surge has been driven almost entirely by perpetual future trading, also known as perps, rather than actual buying of Bitcoin in the spot market. And here's why it matters. Spot demand, which reflects real investor buying, remained negative throughout April, while futures demand increased sharply, indicating rising speculative activity. This divergence is a red flag. CryptoQuant's head of research says that this kind of setup usually means prices are being pushed up by leverage and not by genuine demand. Historically, that does not last. In fact, a similar pattern appeared in early 2022, that is just before the crypto market entered a prolonged downturn. The concern is simple here, and that is when prices rise without real buying support, they often fall once leveraged positions unwind. Adding to the uncertainty, crypto markets in 2026 have been heavily influenced by external factors, which include shifting US interest rates expectations, ongoing geopolitical tensions, including the Iran war, and lack of regulatory clarity, with key legislation like the Clarity Act still stalled. However, there are some positive signals. $1.9 billion flowed into Bitcoin ETFs in the month of April. Total ETF assets now stand at $100.5 billion. Corporate holders added around 58,000 Bitcoins worth roughly $4.4 billion. But even with that, price action has been inconsistent after hitting a high of around $79,500 in April, that is. Bitcoin mostly trended lower towards the end of the month. It currently hovers near $78,000, which is just about 1% below its recent peak. Bitcoin's rally may look strong on surface, but without sustained real demand, analysts warn that it could be vulnerable to a pullback. Investors will now be watching out closely to see whether actual buying catches up or if this rally begins to unwind.